obviously embrace that. And that's the one end of the spectrum. And I think, and you can correct me if I'm wrong, but I think as we sit here today, I think MicroStrategy now has 91,064 or so Bitcoins at an average price of just north of 24,000. So that's the one end that I want to talk about. But the other end of the spectrum is for the family offices, for our viewers here. How do you start? Like, how did you start? I mean, there was obviously a path to get you to that March date. How did you start?
Okay, well, the clock went off in March. We spent about 3 months of education and consensus building, and the company ended up making these announcements late July and acting in August, just in terms of time. Now, if you're, you can learn anything on the internet, by the way. How you start going to YouTube and you start looking at videos. If you want a curated set of videos, go to hope.com, because I posted a curated set of Bitcoin resources, third-party videos, analysis, other companies' views, shareholder letters, my own views, etc. So I think you got to do your homework. You can't really get into this until you understand the underlying crypto theory. What's the theory of a crypto asset network, the underlying macroeconomics, the technical drivers, and then everything else. People that don't understand it, at best they say it's an uncorrelated speculative asset. But once you understand it, you realize it's the solution to your problem, and it takes 12 hours for a person from going from cold to kind of warm, if they have an open mind and if they have the commitment to do so.
It's interesting you say that. So, and I have a view on this, not that mine matters, but should price factor into this at all? When you have not a 5-minute time frame like so many of us do, but when you have a 5-year, 10-year outlook, should you even consider what the price is? Before we came on, we were sort of having a conversation about the price of Bitcoin, but should I even come into the conversation, or should that change your way of thinking?
I think my view here is you ought to look out 10 years. You ought to look at motions or movement in 1-year increments. So your term is 1 to 10 years. And the focus ought to be on trillion-dollar asset classes, not smaller things. So for example, if you look at the 10-year compound annual growth rate of Bitcoin, it's 201% on average every year for 10 years. If you look at and there's $1 trillion in it now. If you look at gold, there's 10 trillion in gold. The compounded annual growth rate for 10 years is 1.88%. If you look at S&P 500 index, well, there's about $32 trillion of assets there. The compounded annual growth rate in 10 years, starting today, 11.6%. Big tech, NASDAQ, that's 18 trillion. You got 17% compounded annual growth. And if you look at the long bond, like 20 to 30-year dated treasuries, you would have got 4% in them over 10 years. So if you look at that and you step back, you say, okay, well, I get the trend. I don't really think it makes sense to actually make a macroeconomic or portfolio move unless you're looking out. Short term is 4 years. Long term is 10 years. If you're going to look at 1 day, 1 hour, 1 week, 1 month, you can look at 100,000 assets every single day, and you can generate millions of times as much information. It's all noise. It's like I take a microscope and I zoom into your forehead, and if I get close enough, I'll find a blemish. I mean, it's
no doubt.
I'm trying to find something to give me anxiety. I will find it if I just look close enough, frequently enough.
Well, isn't the whole system set up right now? Not your system, but in terms of what I do almost on a daily basis, and just if you look at Twitter and you look at the news cycle, isn't the entire thing set up to create the anxiety that you just brought up?
It's entertainment. Right? We have this challenge. There are people that make their living providing information. There's networks like Twitter that keep you with a dopamine hit. There are analysts, and they analyze soybeans versus corn versus futures versus swaps, derivatives, this, that, and the other thing. And they have to have something to talk about every day, every week, every month. We publish a newsletter. Okay, well, that encourages people to generate noise, but it's not signal. Here's signal. If you go look at the blue dollar rate, which is the black market rate of the dollar versus the Argentine peso from 2003 to 2021, it's gone from three pesos to the dollar to 150 pesos to the dollar. And it's just, the dollar is strengthening against the peso every year. That's the trend. If you look at all the currencies, for fun, I look at the last 10 years of every currency in the world. The bottom line is a lot of them are collapsing. Most of them are weakening. A few are trading sideways. And then a bunch are capital controlled, totally collapsing, but no one wants to talk about it. That's the story. Now, if I come back to you and I say, Guy, you live in Argentina, it's 2003. I think the currency is going to keep weakening. You know, what should you do? And the answer is, it doesn't matter what you do. You could analyze every company in Argentina and every bond in Argentina and every piece of real estate in Argentina and every swap and every derivative, this and that transaction. Nothing matters. The only strategy that makes sense is you convert all your pesos to dollars. You forward finance your cash flows to a loan in dollars. You finance all your fixed assets into dollars. You sell equity, which you convert into dollars, and you put the dollars into a bank and you get it out of the country. And if you do that, you'll be fine. And if you don't do that, a million other strategies all don't work, because fundamentally, all of your investments are correlated to a currency which is losing 15% of its economic value every year. And that dwarfs the execution of the CEO. It dwarfs any other strategy that a money manager could apply. And therefore, nothing that happened in Argentina for 15 years matters other than convert your money or convert your investment to a strong asset and put it outside the reach of a government that would forcibly convert it back into pesos and devalue it.